What is up, guys? Good evening, good evening. Happy Monday. Man, we got a lot to talk about today. A lot of different data readings that we're going to be building over, specifically what happened last week, and then most importantly, what the expectations are heading into this week. This is a jam-packed data week. We have so much information that we're going over, so much information that I already know is going to be critical for us to expect, and it's going to potentially affect a lot of the different market volatility. So we're going to dive right into it in terms of what the expectations was when it came to last week, right? So obviously last week was a big inflation data week, right? We got the PCE report, the personal consumption expenditure report. I'm going to go over that in detail. We're going to kind of cover what are some of the different information that we got, right? But again, key inflation measured below 3%. We had new home sales that came out that ended 2023 on a high note, right? New home sales were on an uptick. We saw pending home sales actually simultaneously surge in December, the highest that it's been. We had fourth quarter GDP, so the gross domestic product, that kind of came in, a little higher than we thought, right? It came in within expectations of, what we were really looking for in terms of market fluctuation, and we'll kind of see how that simultaneously impacts the market as well, right? And then the last thing that we have is simultaneously also what are the various different jobless claims. So jobless claims is obviously going to be something that we've been monitoring for quite some time. So remember, it's always going to come down to, and I sound like a broken record, it always comes down to the employment market, and it always comes down to the unemployment and employment ratios, right? So we're starting to see a little bit of that impact, specifically with what it is that our expectations are in terms of the fluctuations, and then taking it from there, okay? So as we continuously scroll down again, as I mentioned, with key inflation dropping below 3%, we have the personal consumption expenditures report, which is December's PCE report. And that simultaneously has shown us that the PCE continuously keeps going down, right? So although inflation rose 0.2% month over month, year over year, it's holding at that 2.6% steadily, which is great. Now, core PCE, which is what we really want to look for, that's the Fed's favorite measured inflation gauge, right? That's really going to show us where home prices are going year over year simultaneously. As you guys can see, it dropped from 3.2 to 2.9. So we finally got that magic number of 2% right behind what we were really looking for, right? Now, the bottom line, again, of what we're looking for, again, as inflation continuously keeps going down, from as high as 7.1% to now being at 2.9%. That's down a big chunk of change. Inflation is expected to continuously keep coming down, and as inflation continuously keeps coming down, we're going to simultaneously see a little bit of market changes as well, right? Now, we know, obviously, the Federal Reserve's main goal over the last few really months was to cut interest rates and reduce spending. Clearly, what they did a little aggressively, obviously ended up working out, right? Now, when we talk about new home sales, so new home sales, of course, ended in 2023 at a very high note, right? So as you guys can see here within the reading, right, signed contracts as of December was almost 684,000. Month over month, it's up 8%. Year over year, up 4%. Medium home price at 413, which is a little bit of a decline from month to month. But remember, the median home price is based off of a high number plus the lower number, and then they take the average. It doesn't mean that home prices are going down. On the contrary, home prices are going up, and we're going to get updated readings on Tuesday with Case-Shiller also confirming the same, right? So again, the bottom line that we're starting to see when it comes to home prices and home sales is the rises in sales are continuously going up. We know that builder confidence at the same time is starting to go up as well. So a lot of these different factors are what we look into when a client is simultaneously engaging, especially with new construction. So of the 453,000 new homes that are available for sale at the end of December, only 81,000 were completed. So always comes down to supply and demand and the tight economics when we talk about that stuff. And clearly these data simultaneously pointing to that as well, right? Now, when we talk about pending home sales, so as you guys can see, pending home sales has jumped up in December, which is pretty expected in terms of a little bit of fluctuation as interest rates continuously start dropping and home prices, in my opinion, continue to slowly appreciate. We're still going to see that uptick in terms of home price sales and home price appreciation as well, right? Now, pending home sales, again, that's what measures the signed contracts on existing homes, right? Which means that they're moving forward, which is showing positive movement and positive demand with projections for things to rise significantly, right? Now, a little bit of a curveball we got thrown at us was the GDP report. GDP is the gross domestic product report. How that came in and grew by 3.3%, okay? So again, the market has been declining by 4.9% within the third quarter, much stronger than the expectations that we were seeing, right? But it's still showing a little bit of a downtick in terms of the readings of what we wanted to see, right? Now, jobless claims. We are now seeing jobless claims last week. They finally moved up higher, which, you know, it sucks for people that they're losing their jobs, but in terms of a recession in the economy, it's kind of what we were looking for, right? So again, initial jobless claims rose by $24,000 in the late 25,000 filings in the latest weeks. That's the highest than expectations, right? As 214,000 people had applied for unemployment. And another interesting thing we're seeing is continuing jobless claims as well, also came up high, which means that new people are entering the unemployment market, and also consistently 27,000 people entered continuing jobless claims, meaning they're having a hard time going back and finding a job thereafter, right? So initial jobless claims, of course, are going to be volatile, but we know that expectation from before, okay? So now when we talk about what to look for this week, I shared a video earlier today in our podcast room talking about what the expectation was this week. We've got so much data that is coming out this week that we really want to make sure that we're staying on top of, right? The first thing we look at is the Fed meetings of 2024, right? That's going to start tomorrow. That's going to be big. What is the Fed's consensus? Are they going to potentially look to cut interest rates in March? Or, as I mentioned in my video earlier, or did we kind of get led astray and kind of got called out a little bit too early when it comes to that stuff, right? And then we also had the Case-Shiller report, right? We're going to get that, which again measures home price appreciation. So we're going to get both the Case-Shiller and the FHFA, and those are simultaneously going to show us a little bit of an uptick or downtick, right? And then the last thing we're going to get this week is actually not even one thing. We're getting 3 different data readings. We're getting the JOLTS report reading. We're getting simultaneously the ADP report, private payroll, and then we're going to be getting the BLS report, Bureau of Labor Statistics, right, which includes both unemployment rate and non-farm payroll rates, right? So a lot going on with the Fed meeting, with unemployment, a lot of different fluctuations. As always, I will continuously keep you guys updated, and hopefully we'll see a little bit of a shift. The market has been kind of pretty flat over the last couple of days, so we're going to kind of see how that kind of transitions and then take it from there. I appreciate you guys jumping on this week. I'll keep you guys updated as always. Any questions that you guys have, visit our website, .mortgages.com. Thanks, guys. Talk to you guys soon.